All right, here we go. It is August of 2023. I'm Ben Miller. Boom. All right, here we go. It is August of 2023, and I am back with the latest market update. Whether you live in Kansas City or whether you're looking to invest or move here, this is an update you're not going to want to miss. Welcome back, everybody. I'm Ben Miller of Ben Miller Realty of Kansas City. Thank you so much for watching this channel. In today's video, this is not a great market update. As we all know, the real estate market is going through a period, what I would like to call, of transition. But it's because I'm an eternal optimist. But seeing what the mortgage rates are at today, that optimism is real shaky. So I'm going to cover that in today's video. I'm also going to cover the latest developments going on in Kansas City, which is something to be happy about if you're looking to move here. Also, I'm going to go over the latest stats and statistics from our market right here in Kansas City and give you a good view of what the realtors are seeing on the ground level. All right, let's go. Little window capture action here. And while I'm doing this, before we get really jumping into it, you can look at these stats and statistics. Just know that if you need a first-class real estate experience, if you want me to be your personal concierge, go ahead and text me or call me at area code 661-236-9055. And did I also say, I can edit this out later. Did I also say that you should like and subscribe down at the bottom? And that way you know when I'm coming out with a new video each and every week. Did I say that? All right, let's take a look at these greater Kansas City area fast stats. Look at these. Look at all of these fancy stats. All right, so the days on market, we are up 77% over last year. 77%. Okay, really quick, I gotta speak on this. We are, in fact, seeing a trend of more houses sitting on the market than obviously the last year or previous years. And I think one of the reasons for that is the interest rates and the mortgage rates with the sudden spike that happened last month. I think people get lulled into a sense of comfort. They're like, oh, there's 5s, there's 6s, there's 7%. Okay, it's not what it was, but we'll kind of we'll ease our way back into the market. And then when we saw the rates go up last month, people started scrambling, thinking, okay, when is this going to end? But with the mortgage rates doing this steady incline, I think when they got into the 7s, mid 7s and high 7s, people were like, So I think they're starting to freeze. Buyers are starting to pull from the market while you're seeing more houses sit on the market than last year. Okay. Average sales price up 4%. Here's another thing. We are still all across the country, not just here in Kansas City, but more so in Kansas City than a lot of other areas. You're seeing housing prices increase despite the current economic conditions. So if you think, all right, here comes the crash, we're going to wait for those, the housing prices to just plummet, it's not going to happen. Not that we can predict, at least. But the housing prices, what we do know is that they keep increasing as inventory still continues to drop and days on market continues to increase. Closed sales down 19.4%, pending sales down 9.6%. Everyone's still getting their 100% of their original price received, so that's still kind of a thing. So that's really great. People that are putting their houses on the market are still getting full price or even above. Now, what we're seeing on a ground level here in Kansas City, as far as realtors go, is we are seeing, like I said, those houses are starting to sit on the market a little bit more. So you are seeing a little bit more price reductions, even in the hot price point of 180 to around 350. Higher end markets, the luxury properties, there is a lot of properties sitting on the market that aren't getting a lot of people coming in and buying multi-million-dollar houses, at least not in the Kansas City area. All right, let's take a more in-depth look here. Closed sales As you can see, that's what causes the 19.4% drop July of last year. This is how many closed sales we had. This is how many we have this year. You see that housing, the average sales price increase, as well as the median sales price. Days on market, up 77%. That's still so crazy. I can't believe houses were flying off the market still, but interest rates were lower. Things were a lot different. Inventory, 5,107 homes on the market right now as compared to 6,266. And of course, you see our historic sales price. Now, if you want a real trip, go back and look at what Kansas City sale prices have been for the last 30 years and watch the upward trajectory even during the 2008 economic downturn. Man, I could do a whole video about how people think the crash is coming, and it just statistically it just doesn't make sense. Okay, so we got those stats out of the way. Let's talk about some building opportunities that are happening right here in Kansas City. So one of the big things that's happening is the KC Current has a riverfront stadium being constructed on the Missouri River. So recently, Port KC backs massive project near KC Current Stadium. The $650 million plan includes more than 1,000 apartments, offices, and retail. So a mixed-use development. So this is something I've been saying for a really long time here in Kansas City. I don't know why we don't do more with the riverfront. We have, Barquet going on down there. We have the KC Current Stadium going up. But I've always seen a lot of opportunity in having more shops, more businesses, more everything along the Missouri River. So the $650 million mixed-use development project being hailed as the final step to a generational effort to redevelop the downtown riverfront. Man, 210,000 square feet of office space and 53,000 square feet of retail. I mean, this is going to blow this whole area up. And as I've talked about in other videos, we're talking about moving baseball stadiums, making Arrowhead Stadium something amazing with shopping and almost like a Westport District type of feel, right where Arrowhead Stadium is in Independence, which is something funny people don't know, that Arrowhead and the Royals actually don't play in Kansas City. They play in Independence, which is still considered the Kansas City Metro, but on the outskirts. So that'll be an interesting thing. And in the news of no thank you, here we go. This one I thought was an interesting thing. The Hy-Vee Arena that used to be known as Kemper Arena is now going to be hopefully an aerial park that is going to go over the Kaw River. That means lots of zip lines. That means a big no thank you from Ben Miller. Why would you want a zip line from like this really tall building, this what used to be a famous sports arena, over a river to another complex? But anyways, Helmut Yon designed the unique external framework supporting the roof of the former Kemper Arena 50 years ago. Wants to re-envision this and make it the largest urban aerial park in the country. You'll be able to put on a harness and take on 70 different obstacles. Mr. McDonald, no, I'm not going to do that. But a lot of people will. But it's just an example of some of the fun, exciting development projects that are coming to Kansas City. So if you want to read more about that, go to flatlandkc.org. And here's a picture, an artist rendering of people on a bridge. And they're like, oh, mom and dad, let's go ziplining over a river and fall into it potentially. Nah, doesn't sound like a lot of fun to me. All right, and in other development news, Kansas City neighborhoods raise alarm against out-of-town real estate funds. So this is a big issue that happens all over Kansas City. Again, you have a lot of investors that are coming into the area. They recognize the growth potential of Kansas City, the cheaper than normal housing here, and they buy up a lot of houses, a lot of apartment buildings, and they rent them out, which is fine. If you're an investor, you want to do that, that's great. But the problem is, and what this article highlights, is that these investors will buy these properties and let them go into disarray. 3 Kansas City neighborhoods and the nonprofit community builders of Kansas City are taking a battle with an out-of-town real estate fund to court. So what they're talking about here is Whitestone Real Estate Fund is at the center of the claims, which involves homes in the neighborhood around East 49th Street and Bellefontaine Avenue. Earlier this year, Alyssa Kennedy, deputy executive of the Neighbor Legal Support of Kansas City, said they tout this portfolio as providing quality, affordable rental housing. And instead, they have let these houses go into disrepair. So this outlines some of the things that in the poorer, more economically depressed neighborhoods, you have these people with all these large investment funds coming in, swooping in and grabbing all these real estate assets and then sitting on them, not redeveloping them, and just letting whole neighborhoods fall into disrepair. Okay, let's go on to mortgage rates. Here is the tough pills to swallow, guys. The 30-year fixed appears to be right around 8%, which is something none of us wanted to see, but we've seen it steadily climb more and more over the last month. And that is in Missouri if your credit score is between 700 to 719. Now, if your credit score is higher, let's do a little bit higher, it's about a 7.5%. So anyways, this is taking into account of a loan of $300,000 and a credit score like mine. You're going to get about an 8% mortgage right now. Here's the bad news. Mortgage rates have hit a 22 high, bank rate says, and that is not necessarily a good thing. We're seeing a lot of people, now that the mortgage rates have hit this high, we're seeing another freeze happening where buyers are backing out from the market and sellers are still holding tight to their homes because these interest rates are just not good for people trying to sell their houses right now. Let's take a look at this article right here that mortgage rates, like I was talking about, hit 8%, starting a worrying sign not seen since the Great Recession. I'm going to speak on this real quick. All right, if you indulge me for a second, I just want to speak on the news cycle and what it does to people's minds. We're getting ready to read an article that talks about how desperate the situation looks. Even me at the beginning of this video said things don't look good, and it's true. Things don't look great right now. But I am an optimist. I look at the brighter side of things pretty much in every situation. And what I can tell you is that the realtors that I know, the economists that I trust, we're all still hoping and praying that the rates will return to a better rate later on this year going into 2024. So when you read things like this, just take it for what it is. The media, the news cycle conditions us to be scared and to be worried. And that's okay. We should read articles like this and take in the information, but do not go full black pill doom and gloom. That's not going to do you any good. That's going to freeze you more than it's going to free you. So let's get back to this article. I just wanted to go on a little mini rant right there. So as we see in this article, so historically the mortgage rate spread has only been around this level only during periods of financial crisis such as the Great Recession of the early 1980s. So you notice how they highlight that to tell you things are going to be pretty bad. And again, things don't look great right now, but we have to look towards the future and say, all right, can things get better and what can I do for my family? So it says consumers seem to be prepared for the 8% rates, which have happened because this was actually written, I think, yesterday as rates were starting to increase. So what happens to housing if rates surge? If the 30-year mortgage rate or mortgage interest rate reached 8%, there would be serious consequences for the housing market, Yoon said. At 8%, the housing market will refreeze with fewer buyers and far fewer sellers, he added. And Yoon, by the way, is Lawrence Yoon, the chief economist at the National Association of Realtors. So other experts said that the high rates have already taken a toll on the U.S. housing sector. A mortgage rate in excess of 6% has already sidelined a large number of potential home buyers, especially first-time home buyers. That's correct. That is and that's what we're seeing here on a ground level. we are starting to see the freeze happening again as these interest rates have ticked up, which is why all the stats that I went over look the way they do. So who would be able to buy and sell? Cash buyers. They tend to be older people like baby boomers who own their homes free and clear, and they live in more expensive areas like anywhere in California. They can sell their home and walk away with an excess of $500,000. And that in some markets buys them 2 homes. That is totally true. Cash is king and always will be in any type of market, but especially the real estate sector. All right, there it is, the market update for August of 2023. I know what you're thinking. It doesn't look great. The rates keep climbing. The Fed is supposed to meet again in mid-September and reevaluate. Some speculate that that's going to be it as far as the increases because they're seeing signs of inflation slowing, such as unemployment and other factors. But if it does raise again, who knows what's going to happen. Again, I am still very, very optimistic that these rates will start to drop, especially in the latter half of 2023, going into 2024. And I know fully well that this video may age poorly. Well, thank you so much for joining me today on this market update. I appreciate you watching. Don't forget to like and subscribe down at the bottom, and give me a call if you want to know anything about Kansas City, and I would love to be your personal real estate consultant. That's area code 661-236-9055 or wrestlingwithrealestate@gmail.com. Thanks for watching today. We will see you right here next week on this channel. Bye-bye.